Hey, what's up everybody? Time for another market update. Per usual, there's a lot to unpack, so let's jump straight in. So we just got through what is typically the slowest month of the year, August, and the market is performing pretty much as we expected it would. The sales volume in California was down by about 24% in July year over year from the previous year. Here in LA, it was down by about 32% year over year from the previous year. And again, that's kind of what we expected. But the good news is, home prices have actually held really steady. In fact, we're still continuing to see multiple offers and bidding wars on lots of properties at different price points, provided that they're priced correctly. Now, the Fed Chair, Jerome Powell, came out with a statement last week that had some very concerning comments in it that sent the stock market into a tizzy. We'll get to that in a second. But in spite of those comments, the prospect for the housing market still looks really strong. Everything that I'm reading from NAR, which is the National Association of Realtors, the Mortgage Brokers Association, Fannie Mae, Freddie Mac, they're all projecting the same sort of forecast, which is that home prices are likely to hold steady and that what we're probably going to see is less appreciation in the coming months, but very little, if any, depreciation. You have to remember that at the core of all of this is a supply and demand issue. Back in 2008, when everything came to a screeching halt during the mortgage crisis, we fell behind pace of the number of homes that need to be built each year to keep a pace with the growing population. That means we've had 14 consecutive years of underdevelopment. Now, you couple that with the massive strain that the millennial generation is placing on the housing market, and what you get is a continued imbalance between a growing demand and a limited amount of supply. In Jerome Powell's statement last week, he basically said that yes, we've made some progress, but there's still a lot more work that needs to be done, and it's far too soon to celebrate. So for those of you out there saying, hey, the Fed's done it, they've curbed inflation, well, not quite yet. He then went on to say that we can expect more rate hikes later in the year. Again, we already knew that, and that it's going to cause some pain for people coming up. Now, the use of the word pain is really what kind of sent the internet running crazy and what triggered a lot of panic and fear-mongering of people saying that the Federal Reserve is trying to purposely crash the economy. Personally, I think that's an over-dramatization of what's happening. The Fed is trying to curb inflation. We know that that's why they're raising interest rates, and they have quite a ways to go. Back in 2016 to 2019, inflation was hovering around 2%. Then we ran headfirst into the pandemic, and when the backlog supply chain happened in 2021, inflation shot up to 9.1%, the highest we've seen since the late 70s. That's why the Federal Reserve took such swift and bold action. Inflation has come down some to 8.5%, so we're making some progress, but as Chairman Powell said, there's a lot more to go. Now, there are a lot of statistics and facts and figures and percentages that are all kind of correlated in support of this, but frankly, it's too much information for me to pack into this one video, so please watch the next video we're going to put out after this for more information on that. For now, let me just see if I can tie a bow on this. Look, we typically see a nice little kick coming off of Labor Day that propels us into the fall selling season. My personal hope and expectation is that we're going to see an increased level of activity coming up, and I think that a lot of people are going to feel confident buying back into the market now that interest rates have come down a little bit, and hopefully some more inventory is coming on after the summertime. The landscape continues to change every day. Please stay tuned for more information, and of course, if you have any questions, don't hesitate to reach out anytime.